The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, David White. And as we start a brand new trading week in the light volumes that is normally this time of year, we are up 15 points on the S&P cash, 1.5 billion shares. So as we said, look forward to lighter volumes. Of course, today is the first day of options rollover, and an important point of options rollover in that this is the setup for the fall and pretty much into November. They're going to start setting up the longer-term options, and it's kind of a revealing. Let me put it that way. Options rollover should be over sometime tomorrow. Look for some volatility. If we're up today, look for a little bit of pullback tomorrow. It's not uncommon to see the big push out here today, a little pullback tomorrow, and then Wednesday, the real direction of the market will reveal itself. And we'll see how those option market makers, as they sell options for the coming months, especially this month and somewhat into next month, are a good window into what they believe. And we'll have to take a look at it. As always, like a little future or past history, to start off the show. In this day in 1982, a bull market suddenly materializes out of nowhere. Daily trading volume on the New York Stock Exchange exceeds 100 million shares for the first time, with 132,681,120 shares changing hands. So a pretty big deal out there. 82, not that long ago, but boy, the growth of shares of companies has been logarithmic over the years. And well, we're saying we've got low volume for 1.5 billion shares. So 15 times what the volume was in 1982. So what else do we have going on out here? Probably there's a few things that it's kind of a quiet day, actually, but not uncommon for this time of year, as most of the people on Wall Street have left. One of the most interesting things is a piece that Herb Greenberg from CNBC has written, and we'll look at Tesla. Let's just get a quick quote from them. TSLA, what do we have? Okay, and it's off 72 cents. I thought maybe you get a little bit of room. Went above the high again today to 267.25. And I'll pop a chart up here in just a minute. Let's see what we have here. TSLA. This thing's been playing around with this February 26th high with 24 million shares. Kind of tried to spike through it again. My guess is that they're going to run this stock in the next few days, and maybe if there's no volume up to the top, we can take a look at it. But this goes into the discussion that I think we can have the time today to go through, and that is cult stocks. Herb Greenberg went through with a forensic accountant with Tesla's books and said that he wrote it basically 6 months or 9 months ago, maybe a year ago, that Tesla was under-reserving for its warranties, i.e. it was using very aggressive accounting that one day will have to come in. So when you look at those 25% margins on a car, when everybody else is hoping to get 5 or 6 in a good year, the question is just how does Tesla do it? Well, part of the way Tesla does it is the same thing that I have against Netflix, and that is that they are basically being very aggressive in the way that they manage their books, and it will come home to roost one day. But basically, they're saying that the change in warranty, if you haven't heard, they're going to actually change the warranty to basically about 8 years on the powertrain. And electric motors, there's not a great deal to go wrong with them. If they need to be, pulled apart, put back together, it's not like you throw a rod and the entire thing blows up. More important is probably, or less likely to die are those motors. More likely, it is the sophisticated computers that control those motors that will be expensive to repair. And that's it. Anyway, they're basically saying that the Model S for the $800 in additional warranty accrual would be a 0.7% impact to gross margins. For every 10,000 Model S's, the sales would negatively impact EPS by 5 cents. So not a great deal, but they weren't accounting for the warranties that they had now. Now, in a cult, or a cargo cult, which is this, and maybe the solar companies are getting close to being in. If people haven't listened before and don't know what a cargo cult was or is, I don't think they exist anymore. But during the Second World War, all these little islands that had natives on it that really had never seen anybody fly over in a plane or never seen a big ship, thought it was all magic. Witch doctors lived on the islands. Everything was magical to them because it was beyond the scope of the reasoning that they had their entire lives when they didn't even have iron to make knives out of. They had to pretty much live with bone. They lived kind of like Cro-Magnon men years ago. So anyway, all these airstrips start showing up, and these planes land, and stuff just falls out of them. I mean, tons of stuff. And the GIs give them lots of food, give them radios to listen to music, all kinds of stuff. And what they never saw or never could put two and two together was all the work that was happening over here in the United States to put all that meat and Spam in cans, to make jerry cans full of gasoline. They never saw all the work that it took, never understood the true cost of anything. And when you get into a cult stock like Tesla, or what the solar stocks are, Netflix, the people that invest with them, for the most part, really don't have any true meaning or understanding of what it takes to make a profit. I think you can almost put Amazon in there, although these things are wildly successful companies. They have yet to prove they truly can make any money. And I think even during the lunch hour, or slightly after it, they had the NBC analyst on about what percentage of cars would even be electric in 20 years from now, or 25 years from now. It was still rather low. Now, of course, if you listen to Tesla, they say half the cars will be electric. And if you listen to the government, they're hoping that they can get maybe 10% of the cars to be electric. The problem is that gasoline continues to be incredibly cheap. You can buy a Tesla, used gasoline, and even if gasoline went to $10, you're probably still better off after 5 to 6 years of buying the gasoline-powered car. So the question is it a conspicuous consumption to buy a Tesla? And is it just, maybe people love it. I know that I've driven one. They are incredibly fast. The problem is that I probably couldn't go to Orlando and back on one charge from Tampa here. But the question is, when does everybody see the man behind the curtain? For a little bit of Yellow Brick Road reference there, and see what actually is happening, and how much is the $1 billion or $2 billion that they're going to spend to build their own batteries? How long does that take to recoup? And do they make a profit on it, or is it just so that they can get enough batteries that they can do this. What happens to the price of lithium since 45% of it's all in Chile? In fact, I would rather own the lithium miners than own Tesla, because if Tesla is a big success, basically they're going to end up just shipping all the cash to those folks that get the raw minerals out of the ground for the most part. You could almost call it an oil cartel for the same thing. So the realities are, though, when you get to be a cult stock like Apple or any of these others, almost always the questions tend to dry up, and no one wants to hear the answers. Just because it is a business, and we're looking at profits, and profits do over time eventually come back into the stock price. But in cult stocks, they are much like the natives. All they see is things falling out of the side of an airplane, people driving Jeeps around, all kinds of stuff that looks like gee whiz, Buck Rogers stuff, and they never ever see the real true cost of what's going on. But hey, what can you say? Oh, he wants to look at, we got somebody in the den here who wants to look at SQM. And yeah, you can look at the price of chemical mining of Chile, which used to have another name, SQM. I played this a couple of times, and I can't remember what it used to be called. But yeah, I think, last I saw, 45% of all lithium came from Chile, and they were already pretty close to that happening. Now, of course, Toyota, we've talked about this before, has decided to go with a fuel cell model. Now, of course, the downside to fuel cells has always been that they use extremely rare earth minerals, platinum, gold, not so much silver, but platinum and gold, of course, the real big ones. And the question is, at what point if any of these things were successful, would the demand for a rare earth mineral, like either lithium, although it's not that rare, but it's less rare than gold, but still in a rare earth mine where you have to basically go through tons of stuff to get what you want to see. It's not like you hit a big vein there and you've got 50% gold or 50% lithium. It's a lot of industrial processes. It's expensive to get it out of the ground. But to me, if I wanted to look at it, and in fact, actually, SQM out here doesn't look all that bad. We'll look at this a little bit more. But it did come down here, test the low. Oh, it hadn't pierced the lows yet. It got into the candle of May 15th, but it didn't pierce it. And it looks like maybe it's going to come back there. Maybe it's President that we're looking at this today. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. We've we've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, when we were talking last, we were talking about SQM, and I'm trying to remember what the other name of this company was. Susquehanna something or other. But they've changed. Chemical mining of Chile is probably a better name. But this thing is a good trader out here. But what we were looking at is this low of May 15th that was a little reversal out here. Came down on heavy volume, which sets up a fairly decent low. May 15th, $27.01, 2.1 million shares. As we get back into it, of course, it was 21 cents higher on August 1st with half the volume. But you still like to see these things pierced, and my guess is that you're going to get an opportunity when this hits 27.01. If it's got light volume out here, not a bad-looking chart. I think you're somewhat limited to the upside by this huge spike from March 5th up to $36.25, but not a bad trading range out here. But especially with their gigafactory lithium-ion batteries, probably going to be moving around. But when we look at Tesla, what is the opportunity or maybe the thought that you might see other companies come in like Toyota with their fuel cell and siphon off a lot of customers? And what's a fairly small business? But you know, what the rest of the world makes in 1 hour takes all year for Tesla to make. So it is one of these companies where you have to look and say, is it a cult stock or not? My guess is, at least on price, if I was fairly evaluating the long-term prospects of Tesla, I think the stock's somewhere between 40 and 45 bucks. That it's, 7 times that? You'd have to say that it is in the cargo cult arena, i.e., just a lot of people looking at it have no idea of how they actually truly make money. And when I was watching that article, I think it was a little bit after 1 o'clock on alternative powered vehicles, the General Motors guys said flat out, there's no way these cars are ever going to amount to anything without a good or huge government subsidy. And of course, most of those subsidies, as we've discussed before, are going to go and be phased out in 2017. The chances of it passing the Senate and continuing, since it was such a big slush fund in the past election cycles, and most of the cash that was in these things went back to a political party. If there's a change in the government, my guess is those people will be on the outs. So is this thing going to fall tomorrow? Maybe not. Is it got a fairly good sign today that it's hit a top? The answer is yes. But like a lot of these companies, it is the pot on the stove that never boils as long as everybody's looking. And my guess is that they'll run all the shorts up before anything happens. But a pretty horrible looking chart if you wanted to go long out here. And maybe this is the top. Maybe it's not. But I'm going to put it in the cargo cult sector, like solar, like Amazon, like Netflix, where no one's looking up under the hood. Did you like that mixed metaphor? Because it just, Amazon, you can turn on the earnings spigot anytime you want. Now the question is, would they get 6% like Walmart does, or would someone else come along and do the exact same thing that they did? How about Netflix? What happens when the way Netflix accounting works out for the movies that they show for 3 months but amortize over 3 years? How does that come out? And what happens when they have a couple of big flops that no one wants to watch on Netflix, and they've got all that money wrapped up in content creation? Because, of course, they're not just a delivery system anymore. They've got their own content. So all these things, I think, are about as rosy as these things get. But at this point, I still don't see a lot of people asking the hard questions. They are the native on the island that everything just looks magical. And at that point, what do? Well, you just wait until it can't go any higher, and then you short them, because they will eventually come back to a decent number. Now, maybe Tesla's got some secret battery technology they haven't told anybody about. But again, if no one's heard it and it hadn't leaked, it probably doesn't exist. Anyway, when we get back, we're going to start looking at some other stocks that I found very interesting. Very interesting. Be back in a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
As we start this week, earnings, for the most part, for the big companies are over, but what are we going to be seeing come this week? And that is the teen clothing industry, which has been in the toilet, but making some signs that maybe this thing could see a low. American Eagle Outfitters had a nice high volume low down at $10.12, May 12th, and got into it. Still hasn't touched that bottom, which again, we'd love it to pierce it and prove the point that it would go lower, volume would shrink. And I think maybe we're going to have that opportunity this week. So if it goes down, dips below, comes back up, we may see a low in these, or it may even be getting worse. But my guess is that we're probably getting the lows, and these kids are going to need new clothes. But you've gotten a very good sign that you probably could get a low down here in this $10 range, with the volume from the first, from that May 22nd, going from 10 million shares to July 28th at 6 million shares. But again, all these earnings are, let's see, earnings date. Okay, that's the 20th. So Wednesday after the bell or before the bell? American Eagle Outfitters. Before market open. Okay, so kind of an interesting sector out here if you're looking to find some stocks that maybe have some decent risk reward. A lot of these stocks are up at their highs, but of course, it won't take a lot. Another one of these teen retailers, BKE, also I think this week, has made a sort of low. I would have liked to see the volume come back a little bit more. February 5th had 520,000 shares, 520,000 shares at 41.45. Got within about 40 cents of that on July 21st. Volume did shrink, 100,000 shares, but generally not enough to put in a bottom as far as I'm concerned. So the buckle will be very interesting to me on how earnings come out. ARO, another one of these. Now this one is exactly what I look for in a bullish chart. But again, I think earnings are, let me take a look here, balance sheet. Let's look at the earnings date too. Okay, they're on the 21st, so it'll be Thursday, and it's after the markets close. So this one is not a bad-looking chart. This is exactly what you want to see. Volume dry up at the lows, and it just goes sideways for a long time and consolidate. So this would be another one that you'd want to look. Hopefully, it just continues to go sideways after the earnings, gives you an opportunity to get in this thing. This thing has been hanging out below its high-volume low, though, which is a concern. But May 23rd, $3.37, 22 million shares, got to 310 and kind of meandered up a little bit higher today. What is it, 320? So they're still under that high volume low, and my discipline would say that you don't buy this unless it closes back above the 337. But let's say that earnings is just mildly less disappointing. It closed back in 337. This is one of these stocks that could have a huge run if business turns once again. And not a bad deal out here. But anyway, any of those, Urban Outfitters. I didn't do that one yet. URBN. Another one out here. This thing needs to come back down to its high volume low of May 22nd, I think. Let's go a little bit longer and see how that gap came in. I guess not, really. It came down there and tested that high volume pop on, August 21st of 2012. That's been acting support. Got into it on May 22nd. This is actually not a bad-looking chart. Urban Outfitters. You, of course, would need a pullback to get back in. But if we're looking at sector rotation, which I suspect we are, looking at things like Microsoft and Intel actually look like maybe they're in this higher trading range, and that's going to be it. Maybe this thing like Microsoft may be 42 to 45 or 46, something like that. Don't have a lot of volume today. Had some volume on Friday. But, you've got to, these are not bad-looking charts. It's just, to me, it looks like it's in a higher trading range. Doesn't look like it's going to break out and go anywhere soon. I wouldn't be shorting these things. But, you look at that. You look at Intel, INTC, the same kind of things. Now, Intel, of course, has got that high volume high at 34.74, and we're going to close in on that. But that probably could mean this thing is also in a trading range between 32 and 35, we'll say, over the coming months. You'd need a great deal more volume, I think, to break out of that high. So, we'll look at that. I've got some other stocks to look at. In the meantime, I did want to remind you about the Tiger Dollar promotions. You may have heard those ads. If you are thinking about getting either one of my newsletters, or how about the Art of Timing the Trade software, the best thing you can do is go to our website at TFNN.com and check out the best way to make some money in a market that's very quiet today. In fact, that may be quiet for the next 2 weeks. So what's the best way for you to make some bucks? If you want to buy Tiger Dollars, which never expire, if you buy $500, we'll give you $700 worth of credits toward newsletters, mine included. or Tom O'Brien's, or any of the wonderful hosts available on TFNN, even my stalker, Andy Heck, you can, it's the best way. And of course, it goes up from there, but 40% basically on your dollars is probably the quickest way for you to make some cash today. Just, I don't know what it'll be. Maybe it'll be that you get in your car and that air conditioning turns cold on your face, and you'll remember that's the time to go to the TFNN website and sign up for those Tiger Dollars and make some hay while the sun is shining. Okay. I had lots of tests out here. A few of these stocks out here are kind of interesting. Yelp didn't really have good earnings, and it kind of was a little bit in the pullback. It's come back up now. Actually, the energy's fairly decent back to the lows, so I can't say anything. You still have a fairly decent high volume low back here on August 1st, though, with 7 million shares, worth 3 million shares. So a lot of these do look like they're in a trading zone, and maybe ripe for intraday trading. Well, maybe in the next 2 weeks, that may be the big way to make cash in this market. Hang on just a second. Let me do a little bit of other stuff. And got a request. And, of course, you can always request stocks for us to look at by emailing me at path, P-A-T-H, at tfnn.com, and or post a message in the den like John from New Jersey did, and or you can call at 877-927-6648. Canadian Solar, actually not bad out here. Had a huge juice out here. Probably the best of the solar companies as far as I can tell, at least from the way that their stock price works. And I think you're a little bit better off with the Canadian Solar for the reasons I said, and that is I think that U.S. subsidies for solar are probably going to dry up in the next year or two, mostly for political reasons, and maybe justified too. Maybe they've given a lot of rope to these companies. I would have much rather seen all that cash go to research and development for something that actually would be market sustainable. But this thing needed 4.3 million shares to break through the April 24th high of 3108. And it was light, pierced it on July 7th, came back into the trading range. And, of course, you are up here and 5 million shares, which is all you need. So you have got a little bit higher out here, which would say that maybe you're going to get back up to this high volume gap down on, March 5th of 16 million shares. So could you get $3-4 more bucks out of this thing? I think you could. Again, I'm not real bullish on solar stocks, but especially this time of year, you can see that stocks can go up on very light volume, as most of the big men of Wall Street are off at the Hamptons. If you wanted to look at any of these, you'd probably want to look at TAN, which is the solar index for that. And so far, the energy on the way up for the total solar index is fairly weak. From this August 1st low at 3780, we're back up to 4302 today. But I don't know. You got to say that you probably don't like this volume really coming in at 780,000 shares on 3780. So, it's probably, like I said, most of these stocks look like they're in a bigger trading range. One of the things we've been watching at here is, of course, our solar stocks and gold stocks. On a broader scale, the miners out here continue to look rather weak. But today you're starting to get a little bit of volume. You got 2.5 million shares on the 11th in the XME. But today we're going back through that high with 1 million shares, which still means to me that we've got to keep an eye on a great deal of these miners out here. I didn't see, where's it at here? To see what gold was at. It's off $6.50. Just under $1,300 on gold. Looks to me like this wants to come back down to $12.75 on gold, and we'll see whether $12.75 holds or not. But as a broader scale, looking at a lot of, copper doesn't look all that strong. The iron ore business didn't look all that strong last week. Kind of interesting to see the metals and mining shares up here at these highs. But interesting. But if this thing does close over 43, 42 with a light volume, you kind of have to keep an eye on this and see which way this turns. I think it'll be very good. Waste management, another one of these stocks that had a huge volume spike on the 29th with almost 8 million shares. Last few days we've had 1.3 million shares, 850,000 shares, 1.6 million shares. Today, 738,000 shares. Like I said, a lot of these stocks give a good indication that they are up here on light volume, and we're probably going to see a trading range. And this one, it's $2 down, so not a big deal. Of course, the drumbeat of Apple, there is no bigger cargo cult than Apple. And we are seeing some of these suppliers to Apple get to rather lofty moves in the stock price. What I'm looking at in Skyworks Solutions, SWKS, is this July 21st high, $54.50. You got into it on Friday with 2.9 million shares. Today we've got 1.9 million shares with an hour to go. So it would be one of these things where it is a lighter volume, and a pullback into this thing would take you back to about $50. My guess is that they're going to hang a lot of these stocks up here over a number of days into that September 9th release of the iPhone 6L for large. That's what the rumor is. They're going to be called the iPhone 6 and the iPhone 6L with the big display. Palo Alto Networks. Now, this is one of these rocket-powered IPOs from last year. But it's showing a little bit of weakness up here at these highs. The June 30th high at $85.74 went through it, pierced it. Okay, proved the point. 1.9 million shares, so 1.1 million shares, basically 33% light, but not pulling back significantly here today. But the light volume and high out here. So this is what I'm watching. We talked about Mattel out here, and maybe also being one of these stocks that goes sideways for a while. And if it consolidates out here, you probably want to keep an eye on this one, too. Let's get just a little bit longer time frame in this thing. You had this high volume low at 34.98. We've gone below it. And, if this thing goes sideways 3, 4, 5 more days and volume remains light, you might find me in Mattel. That is one of the better looking patterns out here if you want to go bottom fishing out here. InterDigital, this thing had a huge gap up on the June 3rd, 4.2 million shares. Tried to come back down to this gap on June 13th with 3.1 million shares, but here's what I liked on this one. On Friday, 390,000 shares back into that gap. Now, maybe it gets back to $40, but if this volume remains light, keep an eye on IDCC and keep an eye to the skies.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Anyway, we were talking about solar, so we probably ought to talk about Jinko Solar since they had earnings out this morning, and the earnings were fairly good. The market didn't like the conference call and the discussions about how the U.S. sanctions, though, would affect the solar cell business, and especially theirs by raising the price of polysilicon, which is what the solar cells are made out of. Basically, the Chinese government is going to ascend to the U.S. Demands for anti-dumping, and that's going to raise the cost, input costs, about 5% for their solar cells. And Mr. Market didn't quite like what Jinko Solar was selling today, so it's down a little bit out here. But I don't think you can make a great deal out of it. But earnings were, at least at the moment, were fairly good. But I thought I'd bring that up while we're here. Dick's Sporting Goods, another one that looks like this retail sector may have hit a tradable low out here, and we'll see how earnings come in this week. I'm not going to stand in front of this train, but it is one of the sectors out here that does look like maybe it might have found a bottom. You had some huge volume down from Dick's Sporting Goods on May 20th with 15.7 million shares. You finally get into a low on May 28th, 8.5 million shares. We've been kind of toying around that area. So you're back at least in the trading range. And, of course, the highest volume out here was about 3.2, near that low. But you did go below it. You did close back above it. So you certainly wouldn't want to be short Dick's here without a nice pop back up, maybe into this gap, $48. But you've got that gap goes away $48 to 53. And the question is, if you could get kind of a mediocre earnings report out here, and then that business start to do better this fall, you might have a nice trading range out here in the $42 range. WFM. What do we have here? Ooh, Whole Foods. Yeah, we've been looking at this one for a while also. What else do we have? Yeah, I mean, this is what you're looking for. Now, what you probably wanted, well, you're in that 49 million shares, so you are setting up that low. You know, this isn't one that's bad out here. I don't know what next earnings is. I think earnings was, what, about 4 weeks ago on this? When's the earnings date? Earnings date. November 4th. Okay. So you got some time. So you're not probably going to have, unless you get a pre-announcement out here, it's not going to be all that bad. Got a doji today. Man, if this could be, you know, not a bad, probably pretty good risk reward at about $38 in Whole Foods, and exactly what you're looking for if you want to go bottom fishing out in this one. But yeah, I'd probably want to be in the 30, if I could get it at 37.5. I think that's probably where you're looking at. You might, you probably have to put a stop under $36, but not a bad trading range. That'd take you back up to about 43, and most likely this is in a lower trading range. But that you're not getting a bounce out of here today means that there's probably still some sellers left in this one. DK, Delect U.S. Holdings, which we will not have time for, as our time together has come to a close. I appreciate all you who listen and email and comment in the den. And we'll see you tomorrow. Same bat channel, same bat time. Remember, so when you can, not when you have to. And hang on for the one and only Tom O'Brien.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.